Hi, this is John Dowdy, and I'd like to give you a quick review of the stock market for the week ending May 31st, 2013. After viewing the video, if you would like to get more data, please come to my website, www.superchargedretirementIncome.com. So I'm entitled this video, Will the Bull Market Continue? Which may seem like a very strange title, since we're in a rip-roaring bull market. It's been going on for over 4 years. This year we have rocketed higher by 15% since the first of the year. Yes, we had a small pullback last week, but we're still very much in a bull market. So why am I asking, will the bull market continue? Well, one of the reasons is some data shown on the next chart. This shows you when you could expect a 5% correction. Now, as you know, in the first quarter of this year, we went very much higher, made over 10% gains. And since 1950, that has happened 9 times. And every one of these times, except for one, which was 1987, the rest of the year was very good. It resulted in even more gains. So that's the good news. However, the not so good news is that in all 9 cases, we've had at least one 5% correction before the end of the year. So that's why I'm somewhat expecting a 5% correction. It may not come now, but before the end of the year, I would expect to see at least one. Now, if we look at the SPY, which is the ETF that represents the S&P 500, this is the chart, shows a green channel lines, and since last November we have been in between these channel lines. A couple of weeks ago we broke out. This was looking very bullish. We broke out, went to a new high, which was even more bullish. Then we had a pullback, which is not that unusual. These are usually called throwbacks. So the pullback to the top of the channel was not unusual at all. It looked like we were going to then bounce off, but then we ran out of steam, and on last Friday we really ran out of steam and crashed back below the top of the trend channel. Is this a correction, the beginning of something bigger? We don't know. But if the market does not recover quickly and move back above this trend line, then my expectation at least is that we're going to go all the way down to the 50-day moving average, which is about 160. Now, it's interesting that if the top here was 169, and if we go down to 160, that's a little over 5% correction. So that would get rid of the issue about not having a 5% correction if we just went down to the 50-day moving average. So if I had to make a guess, I would say that we will bounce off the 50-day moving average. That'll be very good support. If we don't, then we should go down to the bottom of this trend channel. And if that breaks, then we could have a lot of trouble. We may move all the way down to the 200-day moving average. As long as we're above the 200-day moving average, we're theoretically in a bull market. But that would be a very nasty correction if we did go all the way down to the 200-day moving average. This market is somewhat long in the tooth. In another video, we talked about how long in the tooth it was. But this chart here shows that most bull markets run anywhere from less than 1 year to about 10 years. But the vast majority are over before the 5th year. So this is the number of occurrences. We're in the 4th year now. We're a little bit over 4 years. So I would expect that this market could run another few months, but by March of next year, which would be the 5th year, we may have, the trend may have changed and we may be heading towards a bear market. But only time will tell. These are just expectations, nothing cast in concrete. We need to let the price action be our guide, not some speculation of the future. Always wait until the price action confirms the way the market is moving. So in summary, yes, the bull was weakened last week. We did get a throwback to the channel, and that throwback did not hold. We're now back inside the channel, and it's too early to tell if we're in the start of a major correction, but we should pay close attention next week to the price action. If we go back above 167, then you can relax somewhat. We're back in the bull is strong. We're back in a strong uptrend. However, if we continue to correct, I think the risk may be down to the 50-day average, which is around 160. I would believe that average would hold, but if it does not, then we can move all the way down to the 200-day moving average at 150. If that doesn't hold, then I think we're heading towards bear market territory. I don't expect that. I actually expect that around 160 will hold. So a quick legal disclaimer. This video is strictly for informational purposes, and it should not be construed as being any offer to buy or sell securities. Of course, you and only you are responsible for your investment decisions, and as I'm sure you know, investing involves risk of loss, and past performance does not indicate any future profits. So good luck. I hope that we have a good week next week. Thank you for viewing, and as I said, if you would like to get more data, please come to my website, www.superchargeretirementIncome.com. Thanks again for viewing.